Welcome back to Block TV. This is Stress Test. Now, in the crypto sphere, the two biggest drivers seem to still be fear and greed. With emotions running the show, there is a serious need for the industry to develop more accurate metrics. Fortunately, we have a person who can help us to understand things from a new perspective, the TIE co-founder, Joshua Frank. Joshua, thanks for joining us.
Thanks for having me.
All right, Joshua, start us off. Give us you're the man with your finger on the pulse. This past week, we saw many reports of retail interest in crypto down. What have you seen about that?
Yeah, we've been seeing the same thing for quite a while, and we've been chatting about it. Even before Bitcoin's 40% price increase, I'd actually gone on and did a segment with Asher where I talked about the fact that we're really not in a good place as it relates to retail interest. So one metric that we like to look at is 30-day average tweet volume. So that's just an average of the number of conversations on Twitter around Bitcoin over the last 30 days. And while we saw a pretty significant run up this summer to about 38, 39,000 tweets per day, we're back down around 24, 25,000, which is a very, very significant decline. And it's kind of a telltale sign that the retail interest really isn't there. And if we compare this to 2017, even though I don't have the chart here, we're at closer to about 100 to 110,000 tweets a day. So it's a significant decline, and despite that 40% run up that we saw the other day, that didn't seem to have any impact on tweet volumes or retail interest in the market for more than about a day or two.
Mm-hmm. So it seems that the tweet sentiment backs all this talk that the retail interest in crypto seems to be going down. Are you able to see through your sentiment, though, on the institutional side? Are you able to see those numbers? If the institutional numbers, we've been saying that while retail is down, institutions still strong. Do you see that true as well?
Well, so, I mean, I think, I guess this is, kind of more real world example versus, something data, but we had Consensus Invest in New York, which is a digital asset conference focused on institutional investment in crypto. And it was actually one of the best conferences that I think I've seen in the space since at least 2018. So we saw there were a tremendous amount of people there, representatives from, the largest financial institutions, funds in the world. But in terms of an example within crypto and with data, so there's a metric that we track. It's called the NV tweet ratio. And basically what the NV tweet ratio looks at is the network value of a coin as a multiple of its market cap. So basically what we're looking at is over time, a network value of a coin is a multiple of its social activity. So what we're looking at is over time, what multiple of its social activity or cryptocurrency is trading at. And what we've seen with Bitcoin since the beginning of the year is a massive increase. So more than a 3 times increase as it relates to Bitcoin's NV tweet ratio. So Bitcoin is now trading at a 3 times higher multiple of its social activity. And to me, that's a sign that, there's likely some more institutional activity going around Bitcoin. And that's especially true if you compare that to altcoins. So we saw beginning in about August, and this is something that we've covered a few times, is altcoins NV tweet ratios were declining while Bitcoins had begun to increase. And that's something that we thought was interesting, and we kind of wanted to track and see how that narrative played out, and it seems to be continuing. So it looks like there's some institutional interest, but it is very, very strongly Bitcoin interest rather than altcoin interest.
Mm-hmm. When we're talking about Bitcoin, many times, especially with newcomers, even lovers of the sphere, they often compare it to digital gold. Are you seeing that sentiment as well, especially on Twitter?
So we had seen a really, really massive increase, and this is actually covered in the Delphi Digital Report. We helped them with some research, the latest Bitcoin one, which is free. But we had seen in June, July, August, this massive increase in terms of not just numbers of conversations on Twitter, but also number of media headlines on Bitcoin mentioning gold had reached an all-time high. And that kind of correlated with the price of Bitcoin, but we saw both drop off very heavily at the end of the summer. But something which is more interesting is yesterday, for the first time in a while, gold was actually the most frequently used word in Bitcoin tweets. So we saw 770 Bitcoin tweets mentioning gold yesterday, and 63% of them were positive. So, or this was 2 days ago, rather. Yesterday, it was still within the top 10. But it'll be interesting to see how that plays out. We haven't really run the numbers on it, but it seems like there's a correlation between the narrative of Bitcoin as a digital gold emerging in periods where Bitcoin tends to have lower volatility. So we did see that 40% run up day, but for the most part, Bitcoin has, been stuck within, 7,800 to 8,500 or whatever the range is. And it seems that there's some sort of correlation there. So we'll take a closer look.
And which you think is causing what? Is it the fact that it's not volatile, that people start comparing it to gold, or it's the people who are trading believe it's more of a store of value and therefore it's maintaining its stability?
I think this is following the price. That's my guess, because that's what I've been seeing in the market, but that may not be the case. I mean, it seems like, every few months people like to change the narrative in the space to whatever fits their need, right? Bitcoin is going to moon and it's going to go to $100,000 with the narrative in 2017. And then it was, back in the day, it was a means of payment, now a digital gold. So I think people are trying to just, fit narratives to the price. I mean, I think it's a good argument. I think especially as a hedge against macroeconomic uncertainty is one of the best arguments. But we'll see. I mean, I think we have to continue to monitor it, and it will be interesting to see that if this narrative continues to emerge, what the impact is on price.
Mm-hmm. I know, especially last week, it was big headlines that the Stellar Foundation actually decided to burn a very large amount of their of the lumens of the XLM. Did you see what was the sentiment? There we all had our own opinions. What was the sentiment you were seeing though in your numbers?
Yes. So if we zoom out, we actually saw the highest daily tweet volume on Stellar since I believe it was January 3rd, 2018. So we saw this absolutely massive spike. So people, got really excited about it. But the next day, this is basically looking intra-month over the last 30 days. You can see that blue area chart is tweet volume, and we saw this massive upward spike. But the next day, it basically just fell back down. But, price did move upwards, but not, if the market was operated perfectly, it would hypothetically move up 50%. But I think it's up about 20 or so.
Mm-hmm. So it hit a bump, but it was not sustainable. And then, okay.
Yeah, and I think.
Yeah, go ahead.
No, I was just going to say, I think that, that's an interesting thing to track is, what is the actual effect of a token burn, right? In a perfect market, if somebody burns 20% of the supply, you should see, a correlated, upward move in that range. And so, it'll be interesting to see how that narrative plays out, because I think if Stellar did burn 50% of the supply and the price, did double to reflect that, that creates incentive for a lot of these tokens, which don't necessarily have so much demand, to go out there and start burning a ton of their tokens. And I think it's probably a good thing that that's not the case.
Mm-hmm. Okay. Well, I want to switch gears a little bit. Today, or just earlier today, there was a big hubbub on Twitter that PayPal actually announced that they would stop enabling the payments to Pornhub models. Now, Cryptosphere jumped in on that. CZ even commented on that, and many in the Cryptosphere commented on, this might be a good opportunity for crypto, maybe to fill in this gap on this. Have you seen anything in your numbers, or have you seen any reaction to this?
Yeah, so we just pulled this really quick. I don't know if this is a perfect explanation for people are reacting, how people are reacting, but Spank Chain, which is a cryptocurrency, which they have like an adult entertainment network where you can pay performers with Spank, is the name of the coin, saw 411% increase in tweet volume today. And it's moved about 11% upwards. So we're definitely seeing increasing conversations around Bitcoin solves this. And that's also kind of dribbled down to Spank Chain, which is, I guess, the adult entertainment in the room here. Very
aptly named. They are definitely paying in Spanks. Joe, thank you so much for joining us, Joshua, here on Stress Test. And, it's definitely something to keep our eyes on for sure. Thank you so much for keeping your finger on the pulse in the cryptosphere. And make sure to check back next week, as always, here on BLOCKTV.com. Make sure to check out BLOCKTV.com for more news on blockchain and cryptocurrency.
For more news and updates, follow us on Twitter.